Let's ask Richard Bernstein, the CEO and CIO of Richard Bernstein Advisors. Richard, you just heard the conversation with Low Tony about the need for this AI trade to expand just beyond AI and tech, that other companies have to be involved to make that total addressable market work. It's going to be an analogy to the rest of the market, I think, right? At this point, everybody's got to participate. Is that broadening out going to happen?
So I think, Dom, one has to think about this more in terms of individual companies' fundamentals and not try desperately to link them to AI, right? Companies are going to adopt AI regardless of the industry they're in. I think we all know that. The same way that, say, 40 years ago, they adopted the computer. Right? Who would think of any company as being a computer company, right? They all use the computer, enhances productivity, et cetera, et cetera. People should think about AI that way. Companies, of course, are going to adopt them. But I think as an investor, that's not the right way to think about it. The right way to think about it is what's going to be their return on investment from investing in AI and adopting AI. And I think that's a much tougher one for people to grapple with, because return on investment is a kind of a more complicated manner than simply saying, are you adopting AI?
Richard, you've seen a good number of cycles. They come and they go. Some of the characteristics are similar. They're not always the same. But can you take us through whether or not, in your mind, in your opinion, your experience, that there is a speculative fervor in this market that rivals what happened back in 1999 or not?
Well, right. Well, thank you, Don, for saying that I've gone through many cycles. It's a nice way of saying I'm old. But I think, yes, I think we are in some kind of speculative fervor. And I think for different parts of the market, we could argue, are they bubble or not? But it's hard to argue that people are afraid of taking risk. I think that's very hard to find in any market right now. Certainly hard to find in equities, where private client beta is about 1.5. It's hard to find in cryptos when people are, trading any crypto they can get a hold of. People are using leverage through options. Credit spreads are very narrow. It's hard to say that there's not a lot of speculative fervor in the marketplace. And I think when you get that speculative fervor, people tend to forget fundamentals. They become momentum investors, and it's momentum at any price. And that usually is not the right thing to do. Fundamentals ultimately do drive the market. And so in our portfolios at RBA, what we're trying to do is focus on those fundamentals and go back to the tried and true things like quality and dividends and things like that. It's so boring, Dom, but I think it is the right thing ultimately to do.
All right. So if we were to subscribe to your philosophy about investing, given the context around markets and valuations, what exactly then becomes the places in your client portfolios that you're overweight if it's not going to be that momentum tech trade?
Right. I think, Dom, there's two major themes in our portfolios right now. Major theme number one is dividends, what I just said a second ago, and that transcends industry and sector and country, by the way. I think people have forgotten the power of compounding dividends. Since NASDAQ's inception in 1971, more than 50 years, the Dow Jones Utility Index has pretty much kept up with NASDAQ. Not right now because of the Mag 7 effect, but over 50 years, they were neck and neck. I mean, the power of compounding dividends is extraordinary. And then number two is non-U.S. quality. I mean, basically, Dom, if I were to offer you a Maserati for the price of a Chevy, would you buy it? Of course you would. And that's what's going on around the world now. Non-U.S. quality has a growth rate, a projected growth rate, get this, that is faster than that of the Mag 7. The dividend yield is 10 times that of the Mag 7, yet they sell for 30 to 50% cheaper. Sounds like a pretty good deal. Europe has been cheaper forever and a day, but they didn't have the growth story, and now they're starting to have the growth story. And I think that's a big difference.
All right, so look beyond tech, look outside our borders as well. Richard Bernstein, thank you very much. We'll see you soon, sir.